Afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 4th, and wanted to just discuss what's been moving markets, what happened last week in the stock market, where the markets ended up, talk about the increased volatility that we've seen and kind of where we see markets moving forward this week, as well as where we see markets moving forward in the weeks to come. So we ended the week last week on a nice big sell-off in the market. Friday we had the Dow finish down over 600 points, and for the week the S&P 500 was off over 3% for the week. And a lot of that was off of the backs of that increased volatility that we saw in names like GameStop, AMC, BlackBerry, Nokia, those names where individual investors had gone in and identified where professional investors had shorted these companies and went in and bought these companies up. And what happened is a lot of these large institutional hedge funds and institutional money that was betting or doing the short selling on these stocks had to cover their positions. So what they had to do is sell their winning positions, which are the ones that we're all familiar with, the ones that have been moving markets higher, and had to sell those positions to cover their losses. And whenever you start to see some selling pressure in the market, and when you see that happening, a lot of times it can have what's like a snowball effect where people start seeing the market go down and they say, I want out, I want out. This volatility, it's too much. Let's just get out of the market and let this settle itself out. And so we talked a little bit last week about GameStop and what was going on there, but wanted to kind of break down how we kind of got here and where we see things moving forward and the impact overall that it's going to have on the market. And ultimately going back to the fundamental aspect of investing, I think is what is going to reign true and be key moving forward. But wanted to talk about what happened, and you saw it, investors and individuals for the first time really enter the marketplace and say, we really want to have an impact and make a name for ourselves. And you saw that in threads on Reddit, in Wall Street Bets, and you saw groups get together, bind together, and bid up a stock in GameStop. And you bid that stock up, and there were so many people in there buying that the average time that someone actually held the position of GameStop was not minutes or days or hours, it was seconds. So the average person was buying, selling, buying, selling, buying, selling. And what that does is that pushes price pressure up, and that got the momentum to take the stock all the way up to $500 a share. However, what happens is when there's no fundamentals to support that, so earnings, growth potential, things along those lines, you become so incredibly overvalued that there's this huge chasm here that when you run out of people buying it up, it falls back down to reality really quickly. So within a week, the stock has gone from $500 a share to, while we're talking right now, it is trading around $64 a share. So one of the things that I want to do is just caution people when it comes to jumping on the bandwagons and momentum trades is be careful and make sure that you're doing your due diligence as an investor, that the stock that you're investing in and the company that you're investing in is one that has the fundamentals to prove their growth, and it's not just one that's being artificially pumped up, and it doesn't have the balance sheet and the growth prospects to support that. And a lot of this is being done as the industry has gone to $0 commissions, and it makes investing more accessible to more people, which is a phenomenal and amazing thing. It's just making sure that when you're doing the investing that you're not taking a stimulus check, depositing it into your account, and then leveraging all of that and buying one position. So it's really exciting to see the individual investor get involved in investing, and it's really exciting to see the individual investor get into stock picking and trying to accumulate wealth off of that. It's a phenomenal way to do that. But just make sure as you're doing that that you're finding the right prospects that have the right fundamentals to support it. Now, what's caused markets to bounce back this week is ultimately what we were just talking about, is the fundamentals of the marketplace. Earnings are upon us, and the earnings are coming in, and they're coming in much, much better than expected. Companies have done a phenomenal job of weathering the impact of COVID, and the recession of 2020, and we can see the recovery coming in the economy. And now you've seen stock markets recover from their lows of last week and recover well. Well, we've been up every day this week on the S&P 500. So if you have questions about how to navigate or how to pick the right type of equities for you to invest in, feel free to give us a call. We're easy to talk to. You can reach us at 904-630, or always check us out online at www.riverplacecapital.com. I hope everyone has a great day, and so thank you so much for tuning in.